Testing. Good morning, everyone. I welcome you to another day with the Financial Coconut. In our podcast, we'll be debunking financial myths, discovering best financial practices, discussing financial strategies that fits our unique lives. You get it. Ultimately empowering us to create a life we love while managing our finances well. So whether you're interested in the pursuit of the common narrative, getting a degree, finding a job, setting up a family and live happily ever after, or you're an avid FIRE believer, FIRE, for those who are new to the term, FIRE means financial independence, retire early, or you're just quirky, like me, questioning and trying to create a life you love, there should be something for you here. So whether you're on your way to work, to school, chilling by the beach, or just cuddling, snuggling in bed, today's topic is why I believe you should invest. There are so many people online selling you this idea of investing, prying on your fear, keep telling you, you should invest in the stock market, how to buy property with no money down, or you have all this insurance agents calling themselves financial advisors and trying to sell you this unit fund, this unit trust, that mutual fund, this investment linked plan. And don't get me wrong, I think there is a place for insurance and I respect all these agents. It's perfectly alright. But call yourself an agent, call yourself an insurance agent when you mask yourself as an advisor, thinking, telling people this idea that you know so much about finance. But oh my god, I sat down with so many insurance agents and honestly not many of them understand the financial systems. They don't understand a lot about the financial product that they're selling, and it's understandable because many of them are pretty new and very young, and the financial market, the whole system is very, very complicated. I don't blame them. But I just find it uncomfortable when they make themselves sound like, they know a lot and they are here to advise you just because they have took some test and they have passed the test, right? So it's okay. But to each his own, they do their own thing, I do mine. But I strongly believe that investing has its perks and it has helped me to get to where I am. If I didn't invest a few years ago after I made some money, I probably wouldn't, be where I am now, to have all these choices in life and be able to record a podcast and chat with you and share with you my thoughts and not needing to hustle for a job, which is in itself not terrible also, right? We all want to make some money, and working a job, it's very, very amazing. It's just a different form of work like we talked about in our earlier podcast. But today we're gonna dive deeper as to why I believe you definitely should invest. Whether or not you know a lot about investing, you should start. And it doesn't mean that you should start by just plunging in. You can start by reading. Go to the library, get some resources. They are free. And yeah, it brings me to my first point as to why I believe you should invest. It's because the responsibility of retirement lies in you. It is on your shoulders. When we decided that it was okay to not have any form of retirement pension, that was the day when retirement responsibility became yours. Interesting. 40, 50 years ago, people had pension schemes, which means all you need to do is to work really, really hard and stay faithful to a company. When you are no longer productive relative to where you were, you had to retire, you get paid. People appreciate you for your hard work and continue to support you till the end of your journey. But somehow, that ended. And the responsibility of managing retirement, managing your future, managing times when you're no longer making income became more like your responsibility. Of course, now there is this state force, kind of saving scheme called CPF, right? Essentially, it's managing the responsibility with the state and with you. It's like a co-management. But the CPF system is very complicated and it's getting increasingly complicated because of all the possibilities that you can use, special account, MediSave, MediShield, getting a HDB, having a portion of your CPF being invested by financial companies, etc., etc. There are a lot of possibilities, and we will not dive into them in this episode. In future episode, we'll talk a little bit more about the CPF. And for those who don't understand the CPF and not from Singapore, CPF is something like a 401k in the States, something like an EPF in Malaysia. Essentially, it is a savings scheme, right, where a portion of your income is taxed. At the same time, your employer matches another portion of that income, right? So you get about average 20 over percent of additional income that is stored into the CPF, right? So okay, using additional, it's a bit pushing it, but it's okay. Essentially, it is kind of like a forced savings plan, and some of my friends call it a tax, but I won't go that far to call it a tax. But you get the idea. Essentially, the responsibility now is on your shoulders because there's no more pension scheme. Whether you work for the government or whether you work for big companies, pension scheme is no longer popular. Nobody has their future covered. And the co-brokered strategy, which is the state and your shared responsibility of the CPF or the 401k or the EPF, is very complicated, and to me, I question the reliability because it is ever evolving, right? Something that is reliable is something that is always the same. But because it keeps changing, I question the reliability. So the responsibility is on us. We need to learn to manage our future. We need to recognize that, one day I'll not be productive. One day I'll need to stop working. I'll need to retire. And I may fall out of favor with the market, and I need to be able to have resources to manage my life. So I believe you should invest, whether or not you uh, love investing. Honestly, I don't love investing per se. It's more like a tool. It's more like a something I've picked up over time. And yes, it is very, very tedious and very complicated because, I mean, life is already very complicated. You got to learn to manage relationships. You got to learn to do your craft, manage your work, and manage people, and all these different things already. Now you gotta manage your money, manage your retirement, right? So it is tough, and it can be a bit daunting. Also, the reality is you may not have time to do it, which is okay. You can look for professional people that understand different aspects of finance. Look for your insurance agent, find a reliable one to manage your insurance, look for a great fund manager to manage your investments, look for, a great property agent to manage your properties, etc., etc. Look for a great banker to recommend you some of the best debt, some loans, some bonds, etc. Great. But to be able to look for all these people, you need to have some sort of basis. You need to understand, how these things work. At least to a level where you can be like, oh, this guy is good. Oh, that guy doesn't know enough. Oh, that guy is trying to sell me with fear. You get the idea. So the responsibility is on you, right? You need to learn. And I believe that with all this huge retirement bubble in the air, you should learn to invest, and you should invest because there's so much going on into the future, so much uncertainties and so much possibilities. Right, start now. It's great, which brings me to my second point is to capitalize on the power of compounding. Yes, in one of our previous episodes, we talked about how wealth essentially is income surplus compounded over time, right? Which means how the rich people became rich is just because they have a lot of excess from their income, and then they just keep collecting over different generations. They get to where they are. And some of them take on different investment tools, and whether it's buy a property, buy a few properties. I know a lot of my friends, parents, my grandparents accidentally bought a few property in the neighborhood, and then they make some money along the way, or they buy some stocks. They even do some fixed deposit. Many years ago, fixed deposits interest were a lot higher because the world was paying a lot more in terms of the bond rates across the world. Yeah, But some people, they don't use it. They just save, 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 do business, save, 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 do business, right? So they invest in their own business instead of using financial tools. Either way, it's fine. But one thing to recognize is that maybe in the past they don't have accessibility. It's not so easy to get access to information, right? Think about it. If you want to invest in the US, if you want to invest in Singapore, just let's start with Singapore. You want to invest in the Singapore stock market before the age of the internet. Wow. These companies have to mail you, you know, their financial report. You have to go to their companies, you have to go to the exchange, you have to call your broker. Imagine the amount of work just to invest. It's crazy, and you gotta start to learn everything from like books, and which is cool. But these days you have so many more possibilities. Everything is digital. You can invest in the US. Think about it. If back then you want to invest in US, they're gonna mail you the financial report. Oh my god, how long is it gonna take, man? But today, you're a click away from all these things, right? You have many, many amazing platforms. You have Bloomberg. I recommend Bloomberg Technology. Check out their YouTube channel. They talk to you a lot about the future of technology and what are some of the craziest, most innovative startups and what are the tech companies doing. Pretty interesting. All right, check them out. Yeah, so you have all these platforms with YouTube, with Bloomberg, with Seeking Alpha, with all these kind of different information platform, and the ease of trading. You have so much accessibility to the market, right? Everyone can just sign up online, submit your forms, and get your KYC done. Just essentially, it's just vetting that you're not a weirdo. You're not some terrorist trying to funnel money through the market. That's it. All right. So as long as your money is cool and you sign up for this, join any brokerage. I recommend you to check out Interactive Brokers because they have some of the cheapest rates. And sadly, we don't have Robinhood here in Asia yet. It's okay. They have very good rates in Interactive. And yeah, you get it. You have so much accessibility. Why not capitalize on that? Capitalize on the power of compounding because you now have a lot of access to all these places and you should invest because you have the choice to do it. It's not like the past, right? And the power of compounding is amazing. Think about it, right? Just do your math. Do a little bit of your math. Take out a piece of paper. You start at $1,000 every year. You compound 10%, 10%, 10%, 10%. Yeah, you get to like become a millionaire in 30, 40 years. All right, I'm not calculating it on my end, but you can do it, and it's not crazy. The market on average grows at about 10 to 15%. Of course, there are times when it comes down, but on average, right? On average, 10% growth, it's not crazy. Yeah. So leverage and compounding, leverage on now you have the time, right? It's a time game, not a speed game. So invest and invest now. You have more ways to grow your money than our previous generation. So we should capitalize on compounding and invest, which brings me to my third point. Many people are very concerned about risk, right? And I believe that investing allows you to create an alternative income without much risk. Eh? Everyone say investing very risky leh. Why you tell me investing is not risky? I'm going to share with you why. So what are the alternatives if let's say you want to grow an additional income, right? So your main income is your work or the business you've already built, which is cool either way. Strive to do very well in your main hustle, your main income, cool stuff. And then many people want to make additional income, side hustles, right? These days we call it a side hustle, a gig, etc., whatever you call it. The alternatives are either you take on a side job, or you start a side business, or you invest. So when you take on a side job, fair, there's nothing much to discuss. You execute your talent for another platform, you make some extra money, cool. And the difference lies with the discussion lies with side business and investing. So why do I think investing is less risky than starting a side business? Because whenever you start a business, there is sunk cost. That means the money goes in and that's it. it ends there. Like me trying to do this podcast, it is a new business that I'm doing, a new side hustle that I'm doing, right? Which has a business nature. And to start, I need to host my podcast. You are listening to me on Spotify, but I'm hosting it on another platform. And every month, I have to pay 15 US dollar just to host it, and not knowing whether or not it'll be popular, and not even knowing how can I monetize this thing. I'm doing it because I believe that there is a market. We want to talk about it. I think there is a need for financial literacy. We want to raise financial awareness, financial anxiety, reduce financial anxiety, and etc. You get it. But the idea is when you start a business, you have sunk cost. You have money that goes in and you're not sure what will happen. Right? Whether you buy some products, list on Amazon, whether you start a website to host a website, it's not cheap. It's not like free, okay? It's not expensive per se, but it's not free. So there is cost going in. And many people just kind of oversimplify that, it can organically grow, but no, there's so much digital ads that you need to do. There's so many other things that you need to do online. And even if you do simple businesses where you buy something and sell something on another platform, which is what a lot of these Amazon people are trying to tell you, right? Buy from Taobao, then sell on Amazon. It has its risk because there are costs involved and it's sunk. That means the moment you spend, 没有了, no more. It goes in. End of story. And then we hope that it can work. We hope that it gets there. But when it comes to investing, there is no sunk cost. Your money goes in and you wait and you see how it performs. Which means if let's say I have $10,000 and I decided to start a tea business. I spend 5,000 to buy the product, tea. I spend another 1,000 trying to design the website because I don't really know how to do it. I either sign up for some course or get someone else to do it, maybe 1 to 2,000, maybe 3, depends. And I spend money on digital ads, add together about 10,000, trying to get this tea business going. Whether is it, so I'm trying to do this tea business online, right? I'm trying to get it off the ground. That is $10,000, and $10,000 spent, no more. All I'm left with is a pile of tea, a website, and some digital ads trying to make this work. Whether will it work, I don't know. Fair. The alternative is I could take this $10,000 and invest in a company like Starbucks. I could buy $5,000 worth of shares of Starbucks and enjoy and wait. If you think about it, the risk of your business collapsing is maybe 100 times larger than Starbucks collapsing. So there's this misconception and this fear that, what if I lose all my money investing? But somehow no one has this fear that when I start a business, actually I already lose all my money. Very interesting, right? So this is a social thing. We can talk about it in more detail another time. What I'm trying to show you is that if you manage your money well, by investing in companies that are already strong and big, the chances of them going to zero is like almost zero. Do you think Starbucks will collapse in the next 10 years? I honestly don't think so. But I'm quite sure that your business will collapse in the next 3 years. Not because I look down on you, but because by statistics, most businesses, 90, 95, 90 over percent of businesses do not make it by 3 years. They do not make it in 3 years. They do not make it past 3 years. So you get the idea. Investing is one of those ways where you don't really have much risk. Don't get over crazy about what if I lose all my money, what if I go bankrupt, what if I invest in the stock market, then the stock market crash, everything. There are reasons why all these happen, and we will talk about it in another episode. But compare it to business, compare it to starting your own business. I think 10,000 in stock market is a lot less risky than 10,000 starting your own business. One of the underlying belief that I have is not everyone can be a great soccer player, but everyone can choose to support a great soccer team. So yeah, learn to invest. There's so many perks, whether is it to prepare yourself for retirement because one day you will retire and you want to be better prepared. Whether is it to capitalize on the power of compounding. Start when you're young. Over time, it becomes easier and easier. Imagine you want to save $1 million when you're 50. By 60, that would be crazy, right? So start now. Leverage on compounding because we have access to all these tools today. And I strongly believe investing is a great alternative to build an alternative income without much risk. So yeah, I hope you invest, and this is why I believe you should invest. See ya. Test. Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the financial coconut. Knowledge is that much more powerful and interesting when shared, debated, and discussed. I hope you would share what you've gained today with people you love, and I want to hear from you. Give me some questions and help me along with building our community of financially savvy coconuts. I hope together we can fulfill our curious minds and desire for clarity. Email me at thefinancialcoconut@gmail.com or message me on Facebook at The Financial Coconut. I will do my best to address your questions in future podcast series, especially if many people are concerned about the same topic. With that, have a great day ahead, stay tuned next week, and always remember, personal finance can be chill, clear, and sustainable for all.